Welcome to The Explainer. Today, we're digging into some really weird activity around a stock called RZLV. It's one of those situations where the official news and where the big money is going, while they seem to be telling two completely different stories.
So, let's just jump right into this paradox. On one hand, you've got news that would normally make investors just run for the hills. But on the other hand, you've got these really sophisticated financial players making massive bets that the stock is about to just skyrocket. So what is going on here? Here's how we're going to try and solve this puzzle. First, we'll look at the so-called bad news that kicked this whole thing off. Then, we're going to follow the money, and it's a trail of clues that points in the exact opposite direction. And finally, we'll try to piece together what this huge disconnect could actually mean. Right, first up, let's get a handle on the event that started all this speculation. The news that, on the surface, looked like it was definitely bad for anyone who already owned the stock. So, the company just brought in $250 million in cash, and the way they did it was by creating and selling brand new shares of their stock. It's a move that really changes the whole ownership picture. Now, this whole process has a name. It's called shareholder dilution. The easiest way to think about it is this. Imagine the company is a pie. Well, this move just cut that same pie into a lot more slices. So if you owned a slice before, your piece is now a smaller percentage of the entire pie. And this is where it gets interesting, because this one event is seen in two totally different ways. If you're a short-term trader, looking for a quick profit, dilution is a total momentum killer. But if you're a long-term investor, you might see it as a smart, strategic trade. They gave up a little equity to get a ton of cash that they can use to grow the company.
Okay, so that was the bad news. But what's so fascinating here is the financial activity that happened right after that news broke. Because the clues, well, they point in a completely opposite direction.
Our first clue comes from the options market. Now, this is basically where investors can place bets on a stock's future price. And right after this dilution news, someone started placing some unbelievably large and really optimistic bets on RZLV. Just look at this. We saw this sudden flurry of nearly identical trades. And every single one is a bet that RZLV, a stock that's trading for under $4 right now, is somehow going to blow past $15 a share in the next 2 years. These are not small bets, folks. But wait, it gets even more extreme. When you factor in the price they actually paid for these options, the stock doesn't just need to hit $15. For these investors to just break even, to just get their money back, the stock needs to climb all the way past $16 a share. Let's be really clear about what this means. This isn't just a hopeful little gamble. We're talking about someone with very, very deep pockets, betting that this company's value is going to multiply by more than 5 times right after an event that should have scared investors away. And that is the contradiction at the very heart of this mystery. Okay, clue number 2. And this one just reinforces the first. It comes from the other side of the bet, from the investors who were convinced the stock was going to fail. These are the short sellers. Take a look at this chart. On January 20th, there were 38 million shares being shorted. That's a lot of people betting against the company. Then, just 3 days later, after the dilution news, that number just plummeted to 25 million. That means 13 million of those negative bets just disappeared. The short sellers are getting out, fast. It suggests they don't think betting against the stock is a good idea anymore. So, how do we make sense of all this? When you put the bad news right next to these incredibly optimistic financial moves, a totally different picture starts to emerge. You have to ask, right? What do they know that we don't? Institutional investors, hedge funds, they often have access to more information than the rest of us. This kind of weird activity strongly suggests they might be trading on something that isn't public knowledge yet.
One of the big theories floating around is that all this activity is happening because a massive partnership announcement is on the horizon. I mean, the idea of RZLV's AI technology getting integrated into a giant like McDonald's for all their drive-thrus, yeah, that would absolutely be huge news. It would certainly explain this level of confidence.
So really, this whole case is a perfect illustration of a classic market dynamic. You've got the short-term noise, the dilution, clashing with these powerful long-term signals from what we call the smart money. That wild options activity and the fact that short sellers are running for the hills, those are powerful signs that someone, somewhere, is expecting some very, very good news. And that really leaves us with this final thought. It's a critical question for anyone trying to figure out what's really happening in the market. When the headlines look bad, but the big money is flowing in the opposite direction, which signal do you follow?
It makes you wonder what these big players know that the rest of us don't.